Hey, good afternoon. This is Bob from Trade Genius. It's the 26th of June, Sunday afternoon. I wanted to do this video on Friday, but we were just simply exhausted. We were trading from Thursday night all the way through the close on Friday. The market was just presenting too many opportunities to us. And so before I get into the market, I wanted to talk a lot about Britain and the vote, and not necessarily Britain per se, but really what it represents. And you heard the old adage, every avalanche starts with a snowflake, and it's been snowing off and on since last August. And this time we had a snowstorm hit. Last year, China started trembling a little bit with their currency devaluations, and, they threw money at it. In January, they trembled some more, they threw more money at it. Well, they're at a point now with Britain walking away from the European Union, it kind of blocks a couple avenues off for the power elite to keep this game going. And really what the game is they just keep throwing credit upon credit upon credit to make you think everything's fine. And in the meantime, they continue to accumulate more and more power and control over you. So their hope is when things really do go bad, they're going to control all the levers. Well, they're not quite there yet, and the Britain and the way the British voted, I think, caught everybody off guard. Just judging by the market actions in the currency markets and in our markets, is that people thought the Remain vote was in the bag. And now that this has happened, is Spain voted today on Sunday. They voted for a strong left-wing government. These people want to either renegotiate terms with the euro, or they want a weaker currency. And because they're being strangled by what they call the Northern Bloc of Europe. And the Northern Bloc of Europe is where all the manufacturers are. They love the captive audience of the EU, and they love the strong currency. So, now that Italy and Spain and even some of the smaller Northern Bloc countries want to start breaking away, it may cause a contagion here. And Europe is really an entity without assets. And so we have all this credit out there, all these euro bonds that are out there that people bought. And if the euro experiment fails, that these bonds are backed by nothing. None of these countries are going to honor any of these bonds. And what happens is when bonds evaporate, credit evaporates, it causes a bad kind of deflation. It's a debt evaporation deflation. It's not a good deflation where productivity is exceeding cost. It's debt being liquidated, and that drives asset prices down, which basically causes something that you've heard before with the Great Depression. And so their attempt to create the stability with dollops of credit has come to an end. And so now you had China. Now you have what's going on in Britain. Now the French are striking. The Spanish have elected. The Italians are agitating. The Dutch are agitating. The Danes are agitating. And so it's getting to be a little bit crazy out there. Now everybody's at negative interest rates. So now there's alternatives to the banking system with gold. You have ag stocks that are, when I mean stocks, I don't mean stock market stocks, I mean stockpiles are being reduced now because of the what's happening with the harvests in China that I've been reporting on, and the harvests that are happening in Brazil, which I've been reporting on, and now even in France and Germany they're struggling. So, at Trade Genius we're pretty strong with the notion that ag prices are going to go up, and it's going to go up at precisely the time where the central banks want to continue to ease to kind of mollify the masses, and they're not going to be able to, and it's going to cause some really, really, really bad disruption. So, the dominoes are starting to fall, and this fall, if we think it's going to happen with the harvest, and you're going to start getting stockpile deficits, you're going to get the wrong kind of inflation. At the same time, we're getting the wrong kind of deflation. So you're going to have collapsing credits into collapsing food stockpiles, and that's a recipe for disaster. That's what caused the what we call the Arab Spring. Well, add the Arab Spring onto the 2008 event, and that's what 2017 is going to look like. So my recommendation to everybody listening today is to make sure you have some, gold, physical, and or get some in the stock market. Get ag stocks, actually be U.S. bonds. Believe it or not, we're going to be the one-eyed giant in the land of blind people. And make sure you have cash. And that's where you should be playing this market going forward. If you're in equities right now, you need to pair it. It's going to get really, really volatile. July is normally a very volatile month in the stock market because the volumes are down. Now you have volumes down with a lot of event risk. So the markets are going to be flying all over the place. And I think it's going to scare a lot of people. You need to sell into these rallies if you're not already selling. Like I said, get into bonds, gold, ag stocks, and cash, and protect yourself, because the next 18 months is going to be pretty wild. And so, Trade Genius, we're putting out videos every day to help people to to navigate this. I'm also putting out trading tips to help people navigate things on a micro level. So please, check those videos out. Everything's free. The book's out there, it's free. And if you want to join our paid subscriber site, we're doing extremely well. We're over 100% for the year, and we were up nearly 3% on Friday when everybody else was going the wrong way. So this is Bob from Trade Genius, reporting on behalf of Next News Network. I'll be back tomorrow, but hang in there, be proactive, and don't let the events get ahead of yourself. Thank you. Have a great day. Bye-bye.